Bitcoin price predictions have always stirred excitement and debate in the crypto community. With 2025 approaching, many investors wonder if Bitcoin will reach new all-time highs or face setbacks. Some forecasts claim Bitcoin could hit hundreds of thousands of dollars, while others warn of crashes. Understanding what drives Bitcoin's price is crucial before trusting any prediction. Price depends on factors like adoption, regulation, market sentiment, and macroeconomic conditions. Bitcoin's limited supply and growing institutional interest often support bullish views. But risks such as regulation, technological challenges, or market cycles could limit gains. Analysts use models like stock-to-flow, technical analysis, and on-chain data to estimate price targets. However, no prediction can guarantee outcomes in such a volatile market. In this video, we'll explore realistic expectations for Bitcoin's price in 2025. We'll weigh the hype against fundamentals to help you make informed decisions. Knowing what influences Bitcoin's value helps manage risk and set practical goals. We'll also review expert opinions, past price trends, and key events to watch. Stay tuned to get a balanced view of what might lie ahead for Bitcoin investors. Whether you're a long-term holder or short-term trader, this guide will clarify what's possible. Avoid hype-driven decisions by focusing on realistic scenarios and market signals. We'll break down technical indicators and external factors shaping Bitcoin's trajectory. Remember, successful investing requires patience, research, and a clear strategy. Let's dive into the facts and myths surrounding Bitcoin price predictions for 2025. 1. Historical price cycles and trends. Bitcoin has shown distinct four-year cycles aligned with its halving events. Each halving reduces new supply, often preceding strong price rallies. The 2017 and 2021 bull runs followed halving years, driving prices to record highs. After peaks, Bitcoin usually undergoes corrections lasting months to over a year. Understanding these cycles helps set expectations for 2025 and beyond. If history repeats, 2025 could mark the start or continuation of a new rally phase. But cycles are not guaranteed to repeat perfectly due to changing market conditions. Analyzing past trends provides useful context, but not certainty. 2. Supply and demand dynamics. Bitcoin's total supply is capped at 21 million coins, creating scarcity. As more people adopt Bitcoin, demand rises, potentially driving prices higher. Institutional buyers, corporate treasuries, and retail investors contribute to demand. Supply is limited further by lost or inactive coins, tightening circulation. Demand spikes often occur during economic uncertainty or inflation fears. Conversely, sell-offs happen when profit-taking or market panic occurs. Balancing supply and demand factors is key to realistic price forecasts. Watch for large whale movements and exchange inflows as supply signals. 3. Institutional adoption and investment. Growing institutional adoption legitimizes Bitcoin as a store of value. Investment from hedge funds, ETFs, and publicly traded companies boosts confidence. Institutions provide market liquidity and reduce volatility over time. Regulatory clarity encourages more corporate participation in crypto markets. Custody solutions and insurance make Bitcoin safer for large investors. Institutional interest may increase steadily through 2025, impacting price positively. But regulatory crackdowns or negative news can quickly reverse sentiment. Tracking institutional trends offers insight into long-term Bitcoin demand. 4. Regulatory environment. Regulation remains one of the biggest uncertainties in Bitcoin's future price. Countries differ widely in their approach, from embracing to restricting crypto. Positive regulation can foster adoption, increase investor protection, and reduce fraud. Harsh rules or outright bans may limit access or reduce market enthusiasm. In 2025, expect evolving laws around taxation, custody, and compliance. Global cooperation on crypto rules might stabilize markets but reduce speculation. Traders should monitor regulatory announcements closely as they can trigger volatility. Balancing compliance with innovation will be crucial for Bitcoin's mainstream growth. 5. Macroeconomic factors and inflation hedge. Bitcoin is often compared to gold as a hedge against inflation and currency devaluation. Rising inflation or weakening fiat currencies can boost Bitcoin's appeal. Global economic instability tends to drive investors towards decentralized assets. Interest rate changes, fiscal policies, and geopolitical tensions all influence demand. If inflation persists, Bitcoin may gain traction as a non-correlated asset. However, economic recoveries or strong fiat performance could limit Bitcoin's upside. Macro factors add complexity but are essential to understanding price potential. Stay informed on global trends to anticipate Bitcoin's response in 2025. 6. Technological developments and network upgrades. Bitcoin's technology and network improvements affect user adoption and scalability. Upgrades like Taproot enhance privacy, security, and smart contract capabilities. Second-layer solutions, such as the Lightning Network, improve transaction speed and cost. Wider adoption of these technologies can boost Bitcoin's utility and demand. Conversely, delays or security issues could harm confidence in price. Developer activity and community support are positive indicators for Bitcoin's future. Innovation helps Bitcoin remain competitive against other cryptocurrencies. Technological progress often correlates with increased investor interest. 7. Market sentiment and media influence. Investor psychology drives much of Bitcoin's short-term price volatility. Positive news, endorsements, or celebrity involvement can trigger buying frenzies. Negative events, hacks, or regulatory crackdowns often cause panic selling. Social media platforms amplify sentiment, sometimes leading to hype or fear. Understanding market mood helps identify potential tops or bottoms. Sentiment indicators like Fear and Greed Index provide useful signals. Media coverage can both educate and mislead investors about Bitcoin's outlook. Balanced awareness helps avoid emotional trading mistakes. 8. Comparison with other cryptocurrencies. Bitcoin remains the dominant crypto, but faces competition from altcoins. Ethereum's smart contract ecosystem attracts developers and investors alike. Other chains focus on speed, privacy, or scalability, challenging Bitcoin's role. Investor shifts between Bitcoin and altcoins affect overall crypto market dynamics. Bitcoin's digital gold narrative differentiates it from utility tokens. Diversification between cryptos can influence individual asset prices. Understanding Bitcoin's unique value proposition is key for 2025 predictions. Altcoin trends should be monitored as they impact Bitcoin indirectly. 9. Price prediction models and their limits. Models like stock-to-flow and on-chain analytics attempt to forecast Bitcoin price. Stock-to-flow views Bitcoin as a scarce asset similar to gold, projecting high prices. On-chain data analyzes network activity, wallet growth, and transaction volume. Technical analysis uses historical price patterns to identify trends. While useful, these models have limitations and can't predict black swan events. Over-reliance on any single model risks misleading investors. Combining multiple data sources offers a more balanced forecast. Always maintain caution and adjust predictions as new data emerges. 10. Preparing for different scenarios. Bitcoin's price in 2025 could experience bullish, bearish, or sideways movements. A strong bull run might break all-time highs, driven by adoption and macro trends. Bearish outcomes could follow regulatory crackdowns or market crashes. Sideways markets may dominate during periods of consolidation or uncertainty. Investors should define clear risk management and profit-taking strategies. Diversifying crypto holdings and setting realistic expectations reduces emotional stress. Long-term perspective helps navigate volatility inherent in crypto markets. Flexibility and education are essential to adapt as conditions change. Thanks for watching this detailed look at Bitcoin price predictions for 2025. Remember, no one can predict the future with certainty in crypto markets. Focus on research, risk management, and a long-term strategy for success. If you found this video helpful, please like and subscribe for more crypto insights. Hit the notification bell to stay updated on our latest videos. Leave your thoughts and price predictions in the comments below.